Hello everyone and welcome back to another episode of Swing Shift Trades. For anyone who's new to this channel, my name's Matt. I've been trading now for over 5 years, coming from a background of very little trading knowledge up to being a profitable trader. So this channel is really aimed at those people who are beginners or intermediates who want to get up and running quickly and who want a shot at being a profitable trader. So if that sounds anything like you, then you've really come to the right place. And the whole purpose of this channel is really twofold. The first thing is to condense the time frame so that you can pick up information quickly, so that you can get up and running quickly. So here you'll find really the information, how to develop your strategy, how to identify stocks, which ones do I use, and then how do you transfer them to your watch list, and how do you make the decision to buy and not buy. So this won't all come at once. I do rolling videos week after week to get you used to that routine. And when you get used to that routine and you get used to that structure, and then you've got a shot. So just a reminder here that trading is a tricky business. If you look at the stats, they're pretty brutal. So 90% of people who short-term trade, swing trading, day trading, lose money over time for a number of reasons really that we'll cover in another video. So this series or these videos are really all about how you can avoid those pitfalls. And the first one of those is just a reminder, in my opinion, is that never trade with money you can't afford to lose. And more than that, when you first start trading, always use a paper account. And I would recommend for months until you can start to get used to your structure, you can get used to your strategy and start to make and feel comfortable really about making a profit. Can you make a profit? And then you can switch over to using small quantities of real money. And that's really where we are now. These videos are based at beginners and intermediate, so I'll be using a small account. In the future, I might bring my larger account into this, but that's for the future. So in the last video, I went through a trade that I took and that worked out okay. I think I had a 10% profit around there on the small account. But last week, I took one trader only and that was a loss. So that is trading. Anyone new to trading, one of the first rules of thumb that everyone will tell you, any good trader, is that you have to get used to losing. So really a reminder, what you're looking for is success and profit over the long term. Even though you're building that wealth, building your profit over the long term, you will expect dips and peaks. To put that into some context, typically traders may have only a 50 or 60% win rate. But even with those percentages, you can still make a profit if you trade smart. So you've got to get used to winning and losing. It's an important part of trading if you want to take it seriously. So it's only fair for me, I think, to go through that trade, see what went right, what went wrong. But I think it was a good loss and I'll explain why. Right, let's give you a little bit more about this trade. So as I've just said, trading is all about accepting losses as well as your wins. So this was a loss from last week. So this is on a small account that I use for training on this channel. So what can I tell you? That was the starting price, 147, and the end price, 1698. So we took a hit of £49, which sorry, £47. That was a hit off the small account. I think the one before that made over 100 or around 100. So again, that just goes to show that over time, the whole point of trading is to make a bit more than you lose. And that has to happen over a long time period. So I'm never really interested in individual trades. So half the battle of becoming a good trader is to get used to those wins and losses without your emotions going up and down. And that is surprisingly hard to do because we're all human, but it's something you do have to master. So this is my chart. Anyone new to this channel, it looks complicated if you're an absolute beginner, but I've done lots of videos on this in the past and will in the future. So I trade on the 4-hour chart. And I'm a swing trader, so I look to catch dips coming down before they head back up again. So that is my strategy. And to support that, I really only use two indicators. There's the MACD as my primary indicator, moving average convergence divergence, to moving average momentum based indicator. And also the RSI as a secondary indicator. So they're both very simple momentum based indicator. But again, I always emphasize this. I get bored of saying it, but it's so true. The most important thing to do is to get used to the price action. That's watching the price going up and down. And that, if you look at them for hundreds and thousands of hours, you start to get a feel of what might happen. And that, in my opinion, is your edge. Why did I take this trade? This trade was, I would say, a C grade trade. So it was a bit risky to start with. The reason why is that I'm a swing trader, as I just mentioned. So in a perfect world, what I'd be looking for are these smooth oscillations up and down and up and down. Now, because we work in real life, they're quite rare to come across those. So you have to make your judgment, your experience on the back of that to see whether it's a good trade. So why did I choose this trade? Is what I was looking for was an area of support and resistance. So you can see the price did bounce here and the price action went up and up for a long period to this peak, and then it dropped down to this area of support that aligned with here. But it only happened once. It wasn't a particularly clear signal. So you can see this area of support wasn't particularly good here, although we did have a good growth. So there wasn't that repetition that I like to see, hence a C grade. Really, I took that into account and bought a lower number of shares, 547 at this price here. So why do I consider this a good loss? Is because it went up initially and it did make a profit. I think it went into profit about 7% or something like this. I didn't close it because my indicators were still positive. That is, I had dark green histograms here. So for those familiar with the MACD, a dark green histogram is indicative of some momentum. But all indicators are fallible, and so is the MACD. So you can see this price is ranging a bit here. So in a ranging market, the MACD is not particularly effective. So you have to stay on your guard. So the reason I stayed in this trade for a little bit is because there had been this drop. There was an area of support here, so it might have gone back up. The MACD agreed with that because the momentum at the time was green, but it was ranging sideways. So it always fills me with a bit of caution. So when it started ranging and going down, as it did, I closed the trade. Why was that a good decision? Because you can see the price continued to drop. This blue, whenever I close a trade, I just put a temporary line in here so that I can see what happened to the price action. So I actually closed the trade when it was here with it, where this blue line is. And you can see it continued to drop. So I got out, I think, at a good time because I would have lost probably double that if I'd stayed in. It continued to drip down here to this other area of resistance. But what you can see, what might be happening with this trade is that the momentum might be starting to go up. Now, again, the MACD is not infallible, so you still have to rely on your experience overall as a trader. So at the moment, I'm cautious with this trade because, again, there hasn't been this history and it's ranging. On the balance of evidence, one might think it might go back up. But again, it's still a C stroke D trade in my view. So I'm going to keep it on my watch list. I'll keep it on there, but I don't think I'm going to do anything just at this moment. If I open my watch list tab here, if anyone watched the previous video, you might know I had a few others on my watch list. So I'm just reviewing them again before the markets open, or they've just opened now, the market. This is EOS Energy. Again, 4-hour chart. What's it saying to me? So we've had this long period of decline, but there's an area of support here, but it seems to have broken through somewhat, and it's over a long time scale, really. So this was back in April. So Yeah, this is a slow mover. So I'm going to now take that off my watch list. So I'm just rescreening my choices from last week. Again, with this stock that's on my watch list, we have had this continued drop. Again, there's no historical area of support for me to benchmark. So I think I am going to remove this now. My markers, particularly the MACD, my indicator, might suggest that it might be on the upswing shortly, and that might be the case. But there's no other history for me to really gauge that accuracy against. So I'm going to remove that. Going to be brutal. And then the final one, again, there has been a broad area of support here. You can see over a long period of time, but before it hits that layer of support, there were these other areas of support and resistance. But overall, one might think that this might start to be in an area where the price action might bounce. So let me just have a look at my indicators here. I might expand it a bit. It's starting to suggest that we might have some upward momentum here by these dark green histograms, and the moving averages have crossed over as well. So that combination of support with some momentum really has got my interest spiked. So I will leave that on there for now. Don't forget, I'm not placing a trade just yet. I'm just keeping my options open. So we're now down to just two that are on my watch list. What I normally do now is sort them. So at the moment, this one could be ranging. This one seems to be entering the zone of support. So I would say this one is the that's NRGV here. This stock is more promising to me at the moment. You all know now this is the routine. What I would do next is I won't cover in this video, but I'll do in the next one is now I move on to choosing my stocks because it is Monday. So I would choose new tab, go to the screener. I've got my stocks from $2 to $6. Those that have changed more than 10%. I'd refresh and you can see these are all the stocks, how much they've lost in the last week. So remember, I buy on the dip, so I'm looking for stocks that are going down, looking for a reverse. So this is the video that I showed last week. So again, in the next video, I will go through these stocks, screen them with you for anyone interested and put them on my watch list and see if we actioned any. So that would be useful. We've got quite a lot of stocks here, which is good. So one of these might show some promise. So if you've got time, join me in the next one and we can look through these together and pick some good stocks. And what I will also do is let you know which one of these I actually placed a trade on. So hopefully, of course, I'll make the right decision and we'll make some profit. So do check back in the next one and we'll see what happened. So I hope you found that useful. But don't forget, I post at least once a week. And the idea is just to get you familiar with this routine. You've got to keep on having this routine until it actually gets boring. And when you don't experience those emotional highs and lows, then you're making progress. But to get there, you really have to turn trading or swing trading into a routine. So I hope you can join me next time when we'll go through these again. I'll probably go through what stocks I've picked and what I'm going to do with them. So if you want a bit of insight into that strategy and why I chose those stocks and what I'm going to do with them, then please come and join me. And if you do like these videos, of course, like and subscribe. It's a great motivation to carry on doing these, and I hope the information that I give you helps you on your trading journey. So thanks for watching, and I'll see you in the next one. Bye for now.